Yesterday, we saw PPI, we saw CPI the day before. Certainly, this kind of feeds into the Federal Reserve allowing them to continue to probably cut rates here. So we've actually seen rate cut expectations increase.
I think the CPI and PPI were a little surprising. They were slightly below estimates, kind of in line, but slightly below. But if you remember about a month ago when they put out that first CPI report that had come after about a month or two of no reports because of the government shutdown, it was much lower than expected. So it was kind of expectations, especially on Wall Street, were for a decent rebound to kind of balance it out. And that's not what happened. It showed that those numbers put out 2 months ago or so were in line with the trend. Obviously, that can change. But I think what it's showing is that CPI, PPI, especially CPI, which has been stubborn, probably in large part because of the tariffs, kind of adding a little pressure to inflation. Those effects are finally wearing off. And it appears that inflation may be slowly, begrudgingly heading lower. So I think that's a positive. You pointed out the biggest point on retail sales. They've gone nowhere for 2 to 3 years on an inflation-adjusted basis. So that's the data we've dealt with. And then the other data is the employment data, which is just showing a very stagnant labor market. So to your point, I think the Fed has room to cuts. They're not going to cut in January. But I think the fact that the market has a 50-50 shot of a cut by July, I think the odds are better than 50-50. And I think they could cut 1 or 2 times by midsummer, if not more, if the economy slows.
This is the big story for this year. We saw this time last year. We saw the same type of narrative start out early in the year. It was going to be a year of economic reflation and small caps, mid caps are going to do fantastic, et cetera. And we saw that same kind of narrative pop up. And then, of course, we got into mid-year and we had tariffs and a whole lot of other concerns that kind of weighed on that outlook. That's funny, that narrative has now cropped back up here again. We're starting this year with this idea of economic reflation. We're starting to see the stories of global economic reflation starting to surge. We're going to get a lot stronger economic growth this year. And that's kind of an interesting byline to all this. And this is why we're seeing small caps, mid caps, large caps, international. We're starting to see these indexes breaking out to all-time highs on this assumption that we're going to have this economic reflation story. But the risk of that story is that markets have been rallying on the hopes for rate cuts. But if you get an economic reflation, and the word itself means that you are going to get a growth in the economy, which is going to give you growth in inflation. Inflation will pick up with the economic growth, which is going to put the Fed in a much more difficult position about cutting rates, which is what the market's betting on.
Catch me daily on The Real Investment Show. The link is in the description.